So if you don't have a TikTok brain and you're able to give me 10 minutes of your time, I'm gonna show you 5 Confluences for Forex trading, which can be ultra valuable for you. I'm a day trader, but if you're a swing trader, this can be awesome for your trading. Super valuable. So stick to the video and let's get to it. First one, seasonality. Now seasonality, it's a pure probability calculations of where does the market move on each month. Is it bullish, is it bearish? So if you see, I think, how can I do this? Okay, so if we see EURUSD for January, this is based on 20 years, which is basically the whole creation of euro dollar, the pair. You can see, what does January say? Super bearish. It matches the seasonality. Seasonality over the 20 years has been mostly bearish. You can look up on Google for a chart. You can see a chart, or you can see some like you can have a table like this, or you can have a chart like Forex chart, but with some movement over the months. I've did it myself, and I can tell you there's 57% chance January is bearish for euro dollar. So over the course of 20 years, 57% of the time, EURUSD has been bearish. If we check also, December is mostly super bullish. So what we get on 2023, we opened here, around here on December, and the price went up. That's the seasonality playing for you. All right, I'm not gonna go too over in depth. I'm gonna show you the next one. The next one is the COT report. Now the COT report is basically institutions have to give out their positions to the CEC. Did I say that right? Well, the CEC, or sorry for my English, but yeah, they have to share the positions so you can see where the smart money is. This is a smart money positioning. So you'll see on a euro, for example, on December, they are suddenly decreasing their long orders. All right, December 2023, they are decreasing their long orders, which means they're predicting for price going down. Okay, they're decreasing their long orders. The short orders are increasing a little bit. On the dollar, you have no, I can't have the 2023. Fuck. But yeah, you can basically see on the euro we're decreasing long orders, and your SD is going up, and then suddenly, boom, goes down. If we check for the beginning of 2023, you can see that we had this massive drop, and that's due to the smart money accumulating USD long orders throughout January. Although price is going higher, the smart money is not like us. They don't have the liquidity like us. They have millions of lots to place. So, and the market is a zero-sum game. You need someone to buy your shares in order for you to sell it. Well, it's not shares in the Forex market, but I'm just using it like stocks, for example. So they're accumulating short orders throughout all this movement. So again, this is the accumulation. That's why price is moving like this, manipulation, and then the distribution. Because they can't do it like us, just one click, with a click, and sell or buy the market. Again, they need to put a whole lot of positions for them just to have the desired positions they want to have. Because again, they're using huge amounts of positions. So it's just not with one single click that will get them into the market. So the next one we're gonna talk about pair correlations. Again, I'm gonna do a more detailed video on this because I can give you like 20 over different pairs. But if you want to, I can give you DXY for now. I'm gonna do a video on that too. DXY is the best confluence you can have if you're trading anything on a pair with USD in it. Okay, so if I show you on a long time, on a higher time frame, sorry, you can see the lows match the DXY highs, and highs of DXY match the lows, and lows of DXY match the highs of EURUSD. This is because USD is the value of euro against the dollar, and the DXY is the index of the dollar. So again, it's a completely inverted chart. All right. Another one you can say basic, it's GBP USD with EURUSD. Again, the two pairs that I trade, they move similar. And you can see this, right? And you look for the best setup in each one. And yeah, if you guys are good, if you leave a like, I might do the video where I detail it over 20 correlations over different pairs: gold, Australian dollar, GPY, I don't know, even milk. I got correlations for the milk, bro. So yeah, leave a like and I'll share that to you. The next one is the carry trade. Now the carry trade involves the interest rates of the central banks of each currency. So right now, what the carry trade is, as you borrow from a country, from a currency that has a low interest rate to invest in a currency that has a high interest rate. Because if a currency has a high interest rate, they will pay you on your uninvested money. That's why banks increased their interests on your bank account. That's why brokers have done it as well. That's why it's over 5% if you have dollar, because the interest rate of the dollar, it's 5%. And with the carry trade, in this example, you pick one pair that has a high interest rate, and you pick a pair that has a low interest rate. So in these cases, you can see USD, for example, with GPY, because GPY has a negative interest rate for a long time now. And if you pull up USD GPY, because we're expecting USD to go high because of the interest rate, and GPY to go low because they have a low interest rate, the chart will simply tell you the story. Alright? This is for the rich, okay? Basically, let's say it's 100k. It's not that big of an amount, but let's say you borrow a GPY bank, a Japanese bank for 100k, and you put that 100k in the US. And now the US will pay you 5% for the 100k, but you only have to pay, it's negative, but if we use another example, let's say you have to pay 1%. Okay, so now you profit of 4%. If we're using a currency that's 1%, let's say the Swiss franc. Let's say this was, this is poor for me. But yeah, let's say you exchange 100 Swiss francs to US. Now you're getting 5%, and then you have to pay the Swiss bank 1%. You're left with 4% profit. All right, moving to the final one. Yeah, we're coming to about 10 minutes. I hope your dopamine brain hasn't flipped yet. The next one is sentiment Forex sentiment. I showed you the report COT, and that was the smart money positioning. Now I'm showing you the dumb money positioning. And this is probably the best out of these for short-term trading, meaning day trading. What you can see is the dumb money is most likely 84% long on USD, because they're trying to call it the lows, and because we have this big reversal, you can say. But I'm still seeing the XY super bullish. We still have this order block to come. These lows aren't looking that significant, and seeing this big liquidation, I mean, if you trade liquidity just like me, do you think this is a strong close to go bullish? I mean, we can come to this order block and go up, sure. Retrace, or go up from here, sure. But I'm still seeing price go down. And that's good for me, because I'm seeing that most of the money is longing. So if most people are losing trading, you want to be in the opposite side. So if everybody's longing, you look for shorts. If everybody's short, you look for longs. Kind of basic, but yeah, it's Confluences to have on your side, and that's what's really gonna increase your win rate and get you that edge in trading, because that's what we're all looking for. So it's nice little things to add to your trading or to your investments, or if you're swing trading, better yet. So yeah, hope you liked it. Leave a like and all that good stuff, and peace out. Goodbye.